Greetings, Dr. Jeffrey Scott here. This is my weekend market update for June 14th, 2025. Solemn time. No one likes to see wars. And the market certainly didn't like to see the war on Friday. Title this one, Will the Mideast Missiles Blow Up the U.S. Bull Market? Again, my name is Jeffrey Scott. It's June 14th, 2025, and the best emails are either my older hgsidoc@gmail.com or marketmripro@gmail.com. And even better, join my Google group. It's free. It comes up with free benefits. It's called Top Down Trader. As always, this should be considered for educational purposes only. Anything I recommend should be in the spirit of education and not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how to apply them. Trading involves risk, and you alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock I mention, and trading stocks and options should be considered risky, and you should always consult with your financial advisor before making trades. And remember, I am a cancer doctor, not a financial advisor. And I have tools for multiple platforms, and I'm an independent trader. Now, if you look for my market MRI, my stocks and docs wealth charts video, that won't be this one. That'll be posted before the market opens on Monday by the good folks at stocksanddocs.com. My Google group is called Top Down Trader. You just go to Google Groups, sign in, and identify Top Down Trader, and then how you want to be notified. It's simple. Is there a recession in our near future? Well, look, there are so many currents going on. We got war now in the Mideast, could expand. I doubt it. I think that Israel took out the proxies of Iran before they took on Iran. So except for the Houthis, I don't think it's going to expand. But we do have tariffs, although we keep hearing about more delays and whether the China deal is a good thing, bad thing, or just a nothing. But you have to also look at facts. And the facts are that the 10-year minus 3-month Treasury and the 10-year minus 2 Treasuries both had yield curve inversions. We re-inverted or inverted again because inversion would put us back. We're below zero again on the 10 minus 3 months, which happens. We are steep on the 10 minus 2. But when you look at what happens after you recover above that black line, you get these gray bars every time, and those are recessions. So the issue is it doesn't happen right away. So do we have a recession coming? We always have a recession coming. I don't know when it is. Neither do the pundits on TV. If you look at credit tightness, you see that during periods of recessions. Well, we don't have that today. And if you look at the general diffusion activity, the last one in May was -4, and we've got one of these coming up this week. Recessions start when this is below -20. Know your news and earnings. So anytime you've got an FOMC meeting and you got a war going, it's a pretty news-driven week. We got some import prices, industrial production, housing, permits. We've got some Philadelphia Fed manufacturing. So there's quite a few things that are going to come out this week. And we've got some earnings, including some of the housing stocks. I see Lennar sitting there, among others. But it's overall a light week on earnings. And it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. We put together this E-index at the meeting a week ago, and kind of looks like we may have picked the top of the market. These are the stocks that we picked. And just for those that have never done this, Ian taught us, when you're worried about a market top, build a list of leaders. These are stocks that start in the lower left and run up to the upper right. You're not looking at stocks to buy. You're looking to find stocks that are extended leaders. And when the leaders roll over, it's a sign that the market's probably going to follow. Now, the leaders, like everything else, broke, except for defense and energy, broke down below the 17 on Friday. I'll give it a little bit of room to run, but it's already suspect. And then the other thing that I noticed is when I ran my buys, and I look for different stocks to put on a list, and I'll take 4 or 5 of these and perhaps build some buys around them, some I already own. I noticed that we've got some new wolf packs. Wolf packs would be groups of stocks that are moving together in a single industry. Some of these have been reversals off to really big lows. We've got agricultural chemicals. ADM looked really interesting. And yeah, it had a 9.7% move, but it's coming off of horribleness on decent volume. That's also important. That defense, no surprise. Number one, when the missiles fly, you buy bullets. But also, there's going to have to be a lot of replacement of a lot of these weapons, the drones, anything to do with Israel's dome or missile systems. Exploration and production, of course. Now, Iran isn't making much oil or shipping much oil, but they could blockade the Straits of Hormuz as one of their defenses. Marine shipping, I figure insurance goes up, but I guess shipping rates goes up at times like this. Now, I didn't know if refining and marketing had anything to do with the war. Maybe it's the shift from the refiners starting to think about going from summer fuel to winter fuel. But then I thought about what happened in the Gulf crisis in 2013, 2005, I'm thinking, going back even further. And I'm thinking of stocks like Valero that went crazy. So maybe this is also response, probably is. And when the energy prices go up, we start to look at alternatives, and you've got the renewable energy equipment. So, yeah, we still have things like gold, which is a flight to safety, and silver. But the market looks different this week, and it may be a 1 day or 2 day wonder, and that's where you got to be careful. And we could revert back to where we came from. Let's go take a look at some charts just to remind you, if you like this stuff, I don't always post what I think on YouTube, and a lot of times I just put it on my Google groups, top-down trader. And looking at planning an additional meeting, maybe in Florida. So wouldn't that be nice? All right. Where my wife can be the hostess with the mostest like she's done in the past. Here is my Market MRI Pro tool. Now, I used to do a lot of this stuff in a spreadsheet. And one of my followers, Praveen, who's a brilliant programmer, basically made my PowerPoint a program and took each of my PowerPoint pictures that I do and then combined it with stock screening and top-down analysis. And I've got a complete top-down trading tool in one application, and it just changed my life. So appreciative. If we look at one-day moves, you can see volatility was up 7.8% on Friday. 5-day change was 8.54. So most of the volatility came in on Friday. The dollar was up 0.26 on Friday. Over 5 days, the dollar was actually down 1%. So the spider, you can see across the board between 1 and 1.83% down on the major market ETFs. Bitcoin in the middle there, minus 1.5. And if we look at over 5 days change, Bitcoin was actually up a little bit. The spiders and the Qs were down less than 0.5% on the week. And diamonds and Russell led minus 1.2, 1.42. And all of them finished below the 25th decile on their weekly range. So not a good week, not an awful week, pretty awful Friday for many. If we look over here on the right, you could see that Friday was bad enough that it took out our new high minus new lows positive number on the 12 months. The 52-week new high, new lows on the NASDAQ is negative, barely hanging on positive on the NYSE. I got to see 3-digit numbers there at a year for me to get excited about this market. Well, more excited. Those are kind of putrid. If we look down here, we could look at S&P 500 sectors and what led. And the only thing that was up was energy. And you saw in that Wolfpack chart, so many of the things that are moving up are energy stocks. Leading to the downside are some of our favorites, financials and technologies. And then I was a little surprised to see third off the bottom was defensive staples. In fact, on a day like Friday, I would have thought staples would have done better than discretionary. but I wonder if some of those military stocks are actually in discretionary. In fact, the way to look at that isn't, nope, I didn't capture the sectors. All right, never mind. And then we can look at themes. If we look at themes on Friday alone, exploration, solar, gold, Norway, very commodity-driven economy, metals, mining, silver, renewable energy, MLPs, and then there's aerospace and defense. And that kind of fits the stocks that I had listed in my potential interesting to buy. Now, over on the right is Praveen's secret weapon, which built upon one of my buddy Sagar Nandi's tools called Q Edge. And we take the S&P 1500, the NASDAQ, and the NYSE, and we ask what percentage of sectors are up, what percent of industry groups are up. In gray, you see the day before. Green or blue is the current bar. And then what percent of stocks were up. And when 12% of the S&P was up, 1,500, 17% of the NASDAQ, and 19% of the NYSE, you know it was a rough day for stocks. It was a bad day. And you could see at the sector and industry level, we have much fewer positive ones than the day before. And then I don't always talk about stocks above the midline because it doesn't change often. When it's above 50, it's a bull market, or it's the ingredients for a bull market. And when it's falling and below 50, it's the ingredients for a bear market. And of course, 40 to 60 is kind of sideways. But what you have here is you've dropped below 50, and a week ago it was much, much higher. If we go into my timing brief, you could see, and I took off the green lines because I've reformatted them, and I'll show you where I put the 13-week new high, new lows in a minute. But let's go back here and make this 100. You could see here that we had pretty strong V-bottoms on the weekly charts. And then this is my buy-sell indicator. And we saw something different this week. This is weekly charts. Spider, Qs, Diamonds, and Russell. And we actually flipped to a sell. We're still in a sell on the Russell. We maintained a buy weekly on the Spiders, the Qs, and the Diamonds. When the buy signal of any of these goes away, that tells me something because these are very slow to react. And if we look at the daily signals, you can see we've also lost, come on, daily. All right, you can see the dailies are holding on except for the diamonds. So we are now getting into a more choppy looking picture. And if you just look at what's happened, you can see a big uptrend that's starting to either roll over on the Spiders, clearly on the Russell, and the Diamonds, and kind of just going sideways so far on the Qs. So I would say uptrend under pressure is at the minimum. If I go and I look at the U.S. index ETFs, a couple of things I'll show you here is up at the top, I have the high-low jump. And the high-low jump is looking at how extended we are. And it runs from plus 100 to minus 100. We're not extended anymore. So we've come off extension. We have broken this trend line up from the bottom across the board. We have failed at the 200, at the Diamonds, and the Russell. And at best, we're going sideways. At worst case, are we going to come back and retest first the green 17? That's probably too easy. Are we coming down to the 200, and will the 200 hold? Meanwhile, we've busted the 200 on the Diamonds and the Russell. Volatility, as you'd expect on the week, popped, and we talked about 9-point-something. What was it up on Friday? 16.93 on Friday for the VIX. So this is different versus the VXX ETF. And over here, you see the dollar on a risk-off day. The dollar, let's make this bigger, make sure I get it correct, because it should be up. See, the dollar was up 0.26 when I highlight the right bar. Perfect. So a risk-off day. So dollar up, you'll see gold and silver, you'd expect them up, and gold had a wedge pop and continuation on Friday with a big move up, 1.24. Silver is right off its all-time highs, kind of a nothing day, minus 0.27. Oil broke out. Now, oil was threatening and broke out before this. But this was I thought, an extremely well telegraphed event. The U.S. and Iran breaking down, some of their talks were breaking down. Trump pulling dependents out of Iran in the area. And I think basically what had happened is Trump had told Netanyahu to stay out and let him fix it. And when Trump couldn't fix it diplomatically, Netanyahu reacted. But this is exactly what you would see. Even natural gas had a bit of a pop and was up 1.81. And then rates went up in fear. Bonds dropped 1.47 on the 10-year, 1.57 on the 30. Of note, both of them are still below the ever-important 5% line. If I look at my buckets, you're going to see a shift to the left. What does that mean? The gray tells you where it was the day before. And notice how big this bar is of stocks below the Bollinger Bands. 90% of the stocks at any one time are supposed to be in the Bollinger Bands. And now I've got 11% of the NYSE, 13% of the S&P 1500, 12 in the Russell 2000, and 12% in the NASDAQ are now below their Bollinger Bands. When that gets to 25 or 30, we pay a lot of attention because it often means we're going to reverse. And notice all the gray building up on the right. That means it was higher the day before. So we clearly shifted to the left in a much more bearish, but not excessively so stance. Market breadth, you could see that the NYSE broke down pretty hard, that the NASDAQ gapped down. I like to look at market surge for my volume, and I think the volume was mixed, but it's been a day since I looked. Well, not quite a day, because obviously it's only 4 o'clock or 1 o'clock on the Eastern time, and my wife has me here in Vegas, and she's taken me to the Sphere for our first time to see Kenny Chesney for our 40th anniversary. As we like to tell everybody, we've had 3 good years. You could see NASDAQ volume was pretty light. NYSE volume was up, but that's pretty impressive. So even though the NASDAQ and some of these markets fell hard, they fell on except for the NYSE, where you had some of those defense and energy, low volume, which is good, I guess. So you can see NYSE was up, almost no volume on the NASDAQ. You could see the stocks above the 20 in green, 50 in white, and 200 in red all came down as we're working off some of the we were overbought. We're coming off where we were. And if you look just down this, new high, new lows are positive slightly on the NYSE, not on the NASDAQ. Advanced declines and up-down volume negative on both. And with the last signal we had was a bango on Thursday, which is a sign of exuberance, and a bango on Tuesday on the NASDAQ. Now, I'm playing around with this view right here. And this was supposed to be the S&P 1500. So just to show people, we now have, you can look at the ETF, but you can also bring up that little uptick at the S&P, and here's the SPX. So, and I'm not sure that it makes any difference whatsoever, but the reason why I did that is because underneath I have the 13-week new high, new low of the different indexes. And then I have those 20 in green, 50 in white, and 200 stocks above moving average. And I think this is a great way of visualizing, and you could see where each one is when we trigger that new high, new low. When it gets very high, the market has a tendency of pulling back. And when we get to the bottom is when you look for reversals. All right, what else do I want to show you? If I had to ask me about the market, I'd say there are a lot of opportunities in those new wolf packs, and you're buying some cheap things. Like even look at CVS. I think it pays a 6% dividend. It looks like it's got some earnings turnaround coming, but those energy stocks are not going to go down forever. Some of those defense stocks have pulled back some, giving you a new chance to get in them. Gold and silver are expensive, but they may get more expensive. A lot of different things. Those marine shipping are almost so cheap. But if it's just a couple of days and then the war is over and we revert back to a tech-driven economy, well, don't get caught. And then if we look at ratio charts, pretty much everything was down except for energy, and you can see energy turned up. So these are charts. You have Bitcoin up in the left, and the other 11 are S&P 500 sectors. And these are ratio charts of the sector versus the spider. So all could be down and some will be up because they're outperforming. You can see technology has been outperforming. Even healthcare turned up, and maybe staples, utilities, and real estate because of defensive nature. But for the most part, the big news is discretionary came down, industrials came down, communications came down, and energy has turned up some. So we've now looked at the market. We got a sense of what's working, what not working in sectors. Then we get to the heart of the program, which is called the JAS layout. And the JAS layout, I'm just going to review it. This is mine. It's all of yours because you can purchase this tool. But you can customize to have anything you possibly want. Let's just put in the cues while we're loading, and I'll talk about what's going to load over on the right-hand side. I wish I was at home where I had fast internet again. Between last week in Orange County, where the internet was kind of mediocre, and over here, I miss my gigabyte internet. So a couple different things. There's something new here as well. Up on top is my high-low jump. This is an adaptation of something created by my mentor and my hero, Ian Woodward. And what he basically has done is he looked at quantifying extension to the upside. I took it and quantified extension to the downside as low and turned it into an oscillator. So everybody can say an index is extended, a stock is extended. I'm a scientist. I like math. I don't like guessing. So we created a math. When it's down at the bottom, you're extended to the downside. What do you do when you're extended to the downside? You might get lower, but you ultimately bounce. And when you're up at the top, you're extended to the upside. So plus 95 is extended to the upside, minus 95 is extended to the downside. The next are my bongo. You've heard those before. Those are a proprietary indicator I developed with some friends. It is a trending indicator. The top is a daily, the bottom is a weekly. Then I use candles. That's my favorite. Shocker. And we have three moving averages here. The green is a 17 simple. The white is a 50. The red is a 200. In every window, you can click on this, and you could change the duration of those. You can change the color. You can change the thickness. So that's something that you can do as an individual as well. So we got, again, the 17 in green, 50 in white, 200 in red. What else is in this window? I don't see it because we're looking at an index, but we also can look at the relative strength. So, for example, if I pull up First Solar, which is turning around right now, and TAN, which is the solar ETF, has been moving. So you could see, and let me see if I can, why I'm not seeing. We have a relative strength rank we put in there as well. And let's make it bigger. Not sure why it's not showing up. The numbers are showing up. And sometimes you'll hear me making a comment about asking a question about the program. And there's a reason for that, because my partner Praveen will watch the video later, and if I see something that's not popping up, he'll address it. All right, so I don't see it, but we do have a relative strength rank, which isn't showing up right now. Then we have volume. These are my dots. So I like to take a bunch of my signals that will be sitting in the price volume, and I like to make a ticker tape, kind of like an EKG for stocks. The top one is the EMS. It's a very early signal. Green is a long, red is a buy. The next one is a type of moving average crossover I call the CPR, And you notice medical, a lot of these things are medical terms. And then you have gap, volume, breakout momentum, squeeze, coming out of a squeeze, the plain old Wilder PSAR, red candle highs and green candle lows, single candle reversal patterns. And then I really like relative strength. And not only do we have relative strength like the IBD type relative strength, but I've noticed over years of trading that when a stock breaks above the relative strength of the S&P, it typically starts an uptrend. When I look for OBV breaking above the moving average. So the relative strength, just to go back and review, it's a relative strength versus the spider ratio chart with the moving average. And what we're looking for is the break above that moving average. And you can make the moving average your own. I've used a 14-period EMA. And then this is something that Matt Caruso talked about at our program last week. He was such a great speaker. Him and John Person did such a great job. I'm so appreciative. But Matt created something which is a free indicator, and it's called a FOMO indicator, percentage of stocks above the 5-day average. And so right now I'm running it in the NASDAQ. And what he showed us was brilliant, is that, you see a lot in an uptrend, you still see these pullbacks. And he noticed that when starting to see a lot of stocks in the NASDAQ getting above their 5-day move, at 95. Get this straight again. I don't want to say the wrong thing. Above their 5-day average. The percentage of stocks above their 5-day average gets above a certain point, then even if the market's in an uptrend, it doesn't have to have a big pullback, but you might see some of these these short reversals as we're going up and down. I thought that was brilliant. And these are the indicator sets that I use. Over here, I have symbol, last change, percent change, how many dots were up. So if I want to find a stock with a lot of up dots like Toro, so much slower on the road, you could see, now that's an interesting move. It is industrials, massive volume. It's in an EMS buy, which it went in back here. That's why I call it early. The CPR fired. You had a gap, volume, breakout momentum. You just came out of a squeeze. The PSAR is positive. Relative strength and OBV took off, and it did this on a day when the market was weak. That's interesting. Now, if I want to know what happened, I could click up here as the news. Sustain tops forecast on June 6th. They make mowers. I don't even know what they do. Outdoor environment. Okay. And if you want to see the earnings, you go up here and go earnings. That's weird. Is this specific to Toro? I don't think Toro's an IPO. Yeah, for whatever reason, we don't have any it's a cheap stock. No, it's not a cheap stock. It is a cheap stock. So we may not have access to fundamentals on that one. But I'm able to look at who's got the dots. Then these two here, which this is, I think it should say like age, meaning how many days since the bongo changed. The daily changed 12 bars ago, and the weekly changed 1 week because this is 5 daily bars. All right. Then I have 3 momentums, 2-day, 5-day, and 13-day, depending on how I want to rank. Relative volume, what is your volume compared at a given time to a typical day? And then OBV, if OBV is green, that means OBV is above the moving average and how many bars. And then I've got the relative strength, this one here, it's green and how many bars? And then the weekly relative strength for how many weeks is it above or below. So these are the main indicators that I use. Now, the first thing I like to do is to look at how many stocks are there. So even though it was a tough week, 36, 32 is a big number. And where that number comes from is the NYSE plus the NASDAQ plus the Amex gives you a list of stocks that I'll fish from. And then for the purpose of scanning, I take out everything less than $1 and 100,000 shares. And that number goes in the 34s, 35s, and sometimes 3,600. So we have a lot of stocks. Now, every one of these stocks, as you'll see in here, is assigned, the wrong one, try that again, Jeffrey. It's assigned to a, come on. Well, it's supposed to show me that. How about if I do this? Everything is assigned to a sector or industry group. Oh, you know what? What's happened is we've done so much, we've moved so many things around, but everything is assigned. So if I go to top down, these are not the S&P 500 sectors. These are the sectors of all these stocks rolled up. And if I rank them by percent, on the left is sectors, on the right are industry groups, and you've got all the industry groups you could think of, okay, all the sectors. The leader was energy, so let's look at energy. So we have 221 energy stocks in my chart here, and we have 11 different groups, okay? So we know that energy is strong. So we could go through this list here. We could look at the most dots, for example, and say, let's look at Venom. Nice looking producer, but you'll see what I mean by being down in its pattern. You got a long ways to go, but you got higher lows. And take this out, you'll have higher highs. It's probably in a new uptrend, at least on the daily it is. It's not extended. Look at all those dots came in. Relative strength at OBV looks good. Now, what does the white mean? The white thing means that it was up on the day. The fact that it's solid means it closed below the open, but it's still up on the day. So below the 200, I don't like, not extended, but this was one that I actually put on my buy list. Run and array are solar stocks, and I mentioned that solar stocks were strong, but they're all starting from so far back. And then another one that I just saw here, I mentioned that shippers were strong. Well, we saw Frontier on Thursday, I guess as the market was closed before the missiles started flying, but this one looks great. And notice right here above the squeeze yellow, you got 3 momentum signals in a row. And what I talked about at my meeting, I found over time that if I see 2 of these, I pay attention because typically those are a big move day. And when you have one big move, you usually retrace before you go up again. When you have 2, that says something. When you have 3, something's really changing. Now, the bad news is by math, it's getting extended. But there's got to be some discretion how you look at things. And when you see that your price is right around the 200, it's pretty hard for me to say this is extended. The reason why it looks extended is because things have been just going pretty much flat for 2 weeks. DHT is another shipper. INSW is another shipper. So shippers really looked interesting here. So what I might do is say, all right, the top group is energy. Let's look in the top 5 industry groups. So now that 222 is down to 131, and let's kill things that are cheap. So less than $5 and less than 500,000. Now we're down to 90. So theoretically, you could rank them by 2-day momentum. I'm just picking anything and just start looking, RBNE. And one way of doing top down is just to identify the best things. Don't know anything about it. Big move. This is one that has big moves whenever there's craziness in the world. Same thing with this an Indonesian oil company, very sensitive to the price of oil. Fang, Diamondback, a larger exploration production. Like many in the U.S., market still below the 200. And I could go down the list. First Solar has made it to a number of people's buy list. It's probably the best of the solar. I'd rather wait till it broke above the 200, but it's almost there. EOG, I think of this as a natural gas story. Natural gas is more expensive everywhere else in the world, and you could see breaking out above the 200. TRGP is a transmission, if I remember correctly. An MLP, we'll see if it pays a dividend. And it pays a 1.57. Not that exciting. I am in ET for that. Then you've got things like ConocoPhillips, and these guys have really been beaten the daylights out of as oil has been cheap and clearly in downtrends. But when do these things matter again? And you look at the stock on perhaps a weekly basis, and you can see that ConocoPhillips, come on, load the data, has been down for a while, but these used to be strong stocks. So ConocoPhillips looks, is this something that you want to buy? I mean, I'm underweight energy, and I felt it on Friday. I talked about it last week, and I did add a little bit, but I think maybe I don't want to be underweight. 3% dividend, persistent earnings, and really persistent revenue jumping in May. I don't know which is the right one to buy. I'm not recommending one particularly, but you probably ought to have an exposure to energy. Solar Edge is another solar. This one at least has broken out above the 200 and is in a nice little uptrend. In fact, is kind of taken out those prior highs. But when you see the 200 coming down like this, it just gives you a sense of how beaten up these things are. And you don't see a whole lot of making money, which is not something I like to see. So one way is to start as a top-down trader, and I don't want to go to too many of these. I'll look at specific stocks a little bit more before we're done. But you can start to look at where the money's flowing. So let's kill all that. Now, sometimes I might just come in here and say, let's look at the top 10. Now, if you see a blank space, that's unusual, especially with that many stocks. So something must have happened with our data provider, so I'll keep it. 1, 2, 3, 4, 5. Another thing that I'll often do is just take the top 10 industry groups, not even thinking about what sector they're in, just so I could see exactly what's working in the market. And of course, we're seeing almost the exact same with the energy prevalent in this list. So let's go out of this. Let's go into my impulse list. So that is top down at its finest. On the impulse list, remember I still got the $5 and 500,000 that drops me to 1,838 instruments. One thing I like to do is look for a specific signal. I showed you those green dots 3 in a row. All I need are 2 for me to get interested. So let's see if we have any. So you're going to see tankers, I think. TK Corporation is a tanker corporation. Don't have fundies on this one, okay? Breaking out here, pays a dividend, kind of 50 breaking above the 200, 17's above the 50. Massive volume, breakout momentum out of a squeeze. There was your squeeze. Yes, it's extended, but again, it's not that far off the 200. Relative strength and OBV look good. Okay, that looks interesting. TEN. And I apologize for the speed. This is another shipper breaking above the 200. Does this one have fundies? Pays a 9.44% dividend. Earnings are all over the place and don't look to be strong, but they're green. Revenue is green. It's had lots of revenue surprises. Pays a 9.44% dividend. Frontier. Notice I'm not searching for shippers. This is what's coming up. So Frontier has broken out, another energy shipper, 13% dividend. DHT, we already looked at it, another shipper breaking out. Are you getting any sense that maybe we should be looking at shippers, 10% dividend? TNK, this is, I think, the big brother of TK. One or the other is the big brother, has broken out, and this one pays a 7.5% dividend. Range Resource, I think of this more as a gas, but it's an energy play. Energy explorer producer. Wouldn't it be nice if we can get the sub industry here under the sector? I'll have to talk to Praveen. Pays a teeny weeny less than 1%. GD, I think we found our first of the defensive stocks. Again, I said these were off, but look at this, a big breakout here, follow through on Friday, good volume, Relative strength and OBV look good. That's General Dynamics. EQT, another natural gas stock, 2.7% dividend. It's got some earnings per share growth. Nice lower left, upper right, looks like breaking out from a flag. Darling, I think of this as reusing oils from animal waste. And maybe I'm off base on this. I've never really liked the story. Sometimes I let that discolor the stock, and I wish I could look at charts without names and you could see this thing had a massive run and it's bouncing off of a relatively low level. And what I should have showed you earlier, when you look at the daily chart, to be in this list, you got to have these two blue dots together, those two right there, which are your momentum. Archer Daniels Midland, I pointed it out off of my list of stocks I showed you before, which I called the wolf packs. And let's just put this at a weekly so you can see how badly the stock has done. So you have a big low put in here. Coming up now to challenge the 50. It's a beaten up stock. 3 dots, 4% dividend. You go into the daily. And yes, you notice I've got hourly and minute charts now. I hardly ever use them, to be honest. And you could see on the daily, there's your 2 dots. You're breaking out of the 200. Again, I ignore high jump when I'm sitting on the 200 on my bar. 4% dividend. Archer's Daniel Midland. And then AR is another oil energy producer. It brings in money. And of all of them, kind of looks much better. It's more of a lower left, upper right. I did hear from Praveen that there's a bug in the trend line, so that's why the trend line's not working. So that's my favorite scan. What else can I do? Let's kill the filters, get us back to the 3,600. Now let's go in here and let's just pull back in an uptrend. Let's take price over $5, price greater than 500,000. Let's hit OK. And then let's rank these by number of dots. And let's look at them. Zim, this is a shipper, but not an energy shipper. You see a lot of containers that say ZIM on it. Doesn't look that excited to me here. This one has paid big dividends, 22% dividend. So working its way up. Run is one of those solars. That's a theme of the day, is beaten down stocks, trying to make a comeback. Big move on Friday. LMT, Lockheed Martin, another defensive stock. Still below 200. ARRY, ARRY, solar. Certain themes here over and over again. Again, looks better than First Solar, and then it's broken out, but it's not the leader in the group. That's probably First Solar. UUUU. So by definition, these have to have the bottom bongo being blue. In the last 9 bars, there had to be a reversal of red to blue, so a little bit of a pullback and a reversal. And here we're looking at the number of dots, and you can see this is a uranium play. So lots of different ways to slice and dice the market. You look at my buy positions or the ones I'm looking at to potentially enter a long position and comment on a couple. Let's kill the earnings. On Thursday, I said this is the stock that I would own if we break into a war. It was down 0.3% on a bad day. And this is McKesson. And what a beautiful, let's just put this on a weekly. What a beautiful, beautiful, beautiful stock. A competitor of mine, perhaps, one of the 3 that has not bought a company for mine, Cardinal and the former AmerisourceBergen, now called Cencora, have. I love that chart, great company, and in times of trouble, these things are amazing. Let's turn off the weekly, go back to a daily. Let's see, there's one that don't know anything about this company, but the chart looks interesting. This is called SPRY, which is ARS Pharmaceuticals. And it's kind of looser than I'd like it to see. I'll make it less loose. And it's kind of looks like it's having a nice base here, and you had a CPR breakout momentum, relative strength, and OBV took up off on a top day. And we'll got to figure out what's going on with the trend lines here. And it had a pretty massive day in the market, up 6.88%. Now, it's probably a preclinical drug company. I don't expect it to make money. It doesn't really have any revenue, probably licensing only there. And if we look at the news, did anything happen? Earnings call transcripts, so earnings are back in May. I don't know what's going on. Oh, they do have something. No, Neffy, never heard of it. But that one's chart looked interesting in a bad day. So we have gold and silver. AEM is one that I think's pulled back a little bit. Newmont is another one that looked good. Nice little uptrend, AEM. If we look at Newmont, yeah, it's usually much faster. Similar, but maybe getting ready to break out. Lots of tankers and energy. I mentioned Valero. The refiners look interesting here too. And some of these, you could pay a big dividend. It's broken above the 200. If we look at the dividend, 3.5%. So in the small golds, I've liked Kinross for some time. Have positions there. And full disclosure, same pattern as AEM and Newmont. Lots of shippers. Dino's another one of the refiners. I thought I looked at CVS. Oh, something didn't make all my longs. All right, I got to go figure out what's missing here. Oh, I have a filter on. When you don't see what you expect to see, it means you got a filter on. Now we go, we're back here. So CVS has been one that's certainly not been in an uptrend. But look at CVS. I'll show you why CVS is on my list. Sometimes I find decent properties that are beaten up, and I just put them away. So CVS, let's look at it on a monthly. If you remember these companies, they got into a lot of trouble with the feds because of the opiate epidemic. So this was a stock up here in the 114. It's at about 66 right now. It got as low as 12.13. Boy, it was a great buy back here, but look what year that was. Let's look at a weekly, more recent. Way off. Is it done going down? Got a higher high here. We got an uptrend because we got higher lows. Going to have to get a higher high. Maybe we took out that higher low, but we shall see. But CVS, another thing I liked about it, and I'm a sucker for these things, 6% dividend. I don't think CVS is going anywhere, and there's certainly a lot of opportunity for it to slow down. And one of my favorites of the year is giving us a little pullback opportunity, perhaps, which is GE Vernova. And again, I'm a sucker for earnings. I'm also a sucker for dividends. But let's look at GE Vernova. Obviously, it's an IPO. It's run from, 120 to 500. Let's make it a daily so you can actually see more of it. And then, let's get the last bunch. And then let's drop the fundamentals. Look at the growth rate, turnaround growth rate, revenue, really participating in the energy revival. And then lastly, just to look through some of the hot stocks that people like to see very quickly. Amazon, they certainly did not lead on Friday based upon the color. Amazon just going sideways. APP, now we're going to see its earnings growth slow down. Is it done? I don't know. I used to love this stock, but after this peak here, it's just not been the same. Google, again, these things did not do well on Friday is, I think, an understatement. Google bouncing off the 200. Meta has been a leader. Failing here below the prior high. Microsoft, another big leader. Still leading, looks great. Netflix, probably the best of the bunch. All of them had a soft day on Friday. In fact, let's just look at 100 bars here instead of so many bars. You can see the big move there. NVIDIA, not done a whole lot the last week or so, but it's moved up off of the 90s. It's had a great recovery. And then Tesla, I don't know about the fundies. It's never good when your CEO and the president bros gone bad, so we'll see. Off of its highs, but a nice day on Friday. So interesting markets. I think what we see in the macro is going to determine short-term the micro. These war-induced sell-offs and changes don't last, which is why you got to be careful going all in on those wolf packs. But I'll be nibbling some. Hope you have a great week. If you have questions about my tools, you want to learn more about what we're doing, just reach out to me at that marketmripro.com. Join my top-down trader group. And I do these every night. Sometimes I post them on YouTube. Not always. Have a great day, and we'll see you on Monday night somewhere.